Hello and welcome to Jump Advisory's recruitment discussion. As always, people who join the debate, it's a very busy webinar today. If you can hear me, please put a message in the chat box or the questions section. It'd be very much appreciated. And we'd also have an announcement at the end of the presentation, so regarding giving back to the industry, so please hang on for that as well at the end. Last week marked the first official recorded case of COVID in the UK. And the UK repatriated all the remaining residents from Wuhan back to the UK. And then the rest really is history. And as we know, we're fast approaching the anniversary of the first lockdown one, which brought lots of panic to the business world and everyone tried to adapt to the new norm. And it's often said that the quality of a leader is truly shown in times of crisis. And although most of us like to think that we've been the busiest people in the recruitment sector, there's one man who Jump believes has stood out head and shoulders above the rest. From speaking to recruitment agency owners of all sizes, from getting data into the marketplace quickly and efficiently, so recruitment leaders can actually make a more informed decision about moving their business forward, working with the government, the unions, UK major businesses, etc., all to help the UK recruitment agency owners understand what the future of recruitment is going to look like potentially in the future. That person is obviously Neil Carberry, the REC CEO, who's joined us today. Thank you very much, Neil. It's been much appreciated that you have joined us. As Neil's going to talk us through what that looks like, the future, please feel free to ask questions. There's going to be 4 individual sections, so ask questions as the sections come up. Be much appreciated. And please don't be shy, because we know you're all recruiters and that's not in your nature. So Neil, I'm going to hand over straight to you.
Well, Howard, thank you for that intro. No pressure, eh? I've never been any good at praise. Look, the REC as an organisation is absolutely committed to standing behind and beside recruiters. That's what we're for. A few of you on the panel know that one of the things that has always driven me is that organisations have to have a clear sense of what their purpose is in order to be both commercially relevant and practically relevant. And the REC is all about helping recruiters make an enormous contribution to the UK economy and to UK society, which we do. You know, it's a sector to be proud of. I started as a recruiter. I loved it then and I love the sector now. And I thought what we do today is we just roll through some of what we're seeing, have a chat with yourselves and also with some questions. So if we start, I've called this Into 2021 with Confidence, because I think confidence really matters. If you know your canes, the animal spirits, human beings tend to oscillate between the bull and the bear. And I just think we're coming into a more bullish period now, partially because, you know, the vaccine's rolling out, partially because we're coming through this latest lockdown with signs that we're trading through rather better this time than we did during 2020. Yeah, useful to note that it is a year since those repatriation flights from Wuhan, Howard. I think, yeah, a long year, but simultaneously also quite a short one in terms of the fact that it still feels like March 2020 every day. When we look at the industry just now, I think we see a lot of vibrancy and a lot of resilience. And that gives us a reason to believe that, you know, the swing back is coming and that people will, almost as human beings, they need to bust out of where we've been for the last year. There needs to be some activity, there needs to be some drive. But I think the fundamentals also support that, which we'll go on to talk about. So a couple of things on what we're seeing in the market right now. So simple question, what's going on? Well, first and foremost, there is a really big fissure in our data at the moment between what clients think of the wider economy, roughly that it's in the toilet, and what they think of their own business and their own willingness to hire, which is actually quite positive. This is last week's Jobs Outlook, which is our survey of client businesses, into positive territory, sustainably in positive territory now, for both agency and permanent staff. Really clearly weak on the wider economy, but let's remember that we're in a moment of great economic uncertainty, and it's not just COVID. Obviously, we've got Brexit, and the workings of the Brexit deal. And I suppose for us as service industries, we don't really know about the Brexit deal yet because we aren't sending that many people to Frankfurt or Paris or Madrid right now, because that's kind of not what we do. There's already some emerging data that suggests that inconsistencies in the application of the deal for services companies across Europe need to be ironed out. And obviously we've got the big challenges with getting goods across the border, both the internal UK border over the Irish Sea and to Northern Ireland, and the European border. There's a lot to work through on that. And I think that's contributed to some of this economic anxiety as well as COVID. But critically, when you ask people about their own firm, they're a lot more confident. And I think that's that Keynesian, it's time to bust through. We've learned how to trade in this environment. We've done the reshaping we need to do. I think ONS data suggests we've probably already seen the spike of redundancies. So I think there's a reason for confidence when dealing directly to clients. Now, if you kind of build on that and look at what's actually happening in terms of what the REC membership are seeing, the report on jobs 8th of Jan, which is the one for December, was the first one where we had a return post the November lockdown to growth in billings for permanent. I think until we're through this, permanent will probably still be subdued, but I'm still in a sort of spring to summer space on that. Temp has started to recover before the first lockdown ended in April, has bounced back strongly and has remained strong. And we've got the latest version of ROJ coming out at the end of this week. And without busting confidences, that story isn't challenged by that data. We also saw pay bounce back, starting pay bounce back in December. I think that's interesting because there are reasons to believe that the looseness that we're seeing in the labour market right now, the big peaking candidate supply, will not be a long-lasting thing because of the nature of the shape of the economy going forward. We'll talk about that a bit later on. But critically, if you look at what's happening in different sectors, the question that I think agency owners and leaders should be asking themselves is, everything declined with the exception of logistics, healthcare, obvious pandemic affected sectors for the positive last year. Which ones of those, to use my kind of economist wonk speak, which ones of those are cyclical declines, i.e. when COVID is over, there's a big bounce back going to come? And which of those are secular declines, i.e. these are things that aren't coming back and there are new things which are coming through? And I think that's a thought process that agency owners I see undertaking around the membership. And the classic example of that, just pull it off the high street, is retail and hospitality. Mm-hmm. I think we all think that restaurants will still be a thing in 2023. And there'll probably be quite a lot of them. Even before the pandemic, we knew that employment in high street retail was not going to go up. It was going to go down year on year on year, and it's been accelerated by the pandemic. So you've got some sectors which are shrinking and some sectors which are growing. We know across the membership that IT, if it had a recession at all in 2020, did not have a very big one. That is because of the level of investment that flowed, not just from how do we trade through when we all have to work at home, but also from the fact that we've done that, hackneyed phrase, 5 years of digital innovation in a year, but we have, as businesses, done that. Parochially, the REC examines candidates now in their homes digitally in a way that a year ago we were running exam halls to do professional qualifications. And every business has had those changes. So a really big question that I think we all need to focus on is, where are the growth areas coming forward? I think the data's starting to show where they're going to be. But that's my overview of where I think the market is at the moment.
Neil, could I just ask you a couple of questions, if you don't mind? So there seems to be some sort of contradictions, in a sense, in this, from the perspective that in some sectors we're seeing growth, as you've just shown, and others obviously shrinkage. How much of that, as you say, would have happened anyway, given the trends that were apparent pre-COVID? You mentioned something quite interesting. I think that you mentioned that you believe that the unemployment levels have probably spiked, and yet we were hearing back end of last year rumours, Bank of England talking about unemployment reaching 7.5%. So is it your view, is it the RAC's view that maybe the worst of that situation isn't likely to happen, that we probably are not going to see unemployment hitting that level?
I think 7% is perfectly reasonable.
Okay.
And redundancy spiked. I don't think we'll see the spike of unemployment until maybe later this year, but then unemployment always drags. And you know, people on the webinar who've been through recessions before will know that usually recruiters are in recovery mode while unemployment is still rising. So I do expect it to rise. I think what's really important though is to set 7.5%, if that's the peak of unemployment in context. That is a full percentage point less than unemployment during and after the Great Financial Crisis. The Great Financial Crisis was an 8.7% peak to trough drop in the UK's production. We are still today well behind, facing a drop much bigger than that in terms of production today. And of course, at the peak, it was more like 20 to 25% back last spring. So I think 7.5% set in context is actually a pretty good performance from the labour market. And what it speaks to, of course, you've seen that spike in temporary work through this year, 4% more temporary workers in the last ONS stats than the previous quarter. What it speaks to is the importance of the work the industry does on the temporary side in terms of keeping people in work.
And I think that segues really neatly into my next question, because we've been saying for the last 9-10 months that if history repeats itself as we fully expected it would, we would see the temp or interim market coming back quicker and stronger than the perm market. And I think the stats that you've just shown us seem to indicate that that is the case. And not just in one or two sectors, but in many instances, almost across the piece. How much more growth can we expect to see now? Maybe not exact figures, but would you say there's every reason to believe that that interim market, despite IR35, is likely to continue to increase?
I think it is. I think the market might reshape a bit around things like IR35. I think it's always worth remembering that big macroeconomic fundamentals shift the market a lot more than regulatory changes ever do. And IR35 in any normal year is absolutely enormous for the sector, and it is absolutely enormous for the sector. I was clearing our budget submission to go into Rishi Sunak this morning, and there's a lot about IR35 in it. But I think we need to think about it this way. All of the macroeconomic pushes onto clients at the moment are encouraging them to move to temp. Because in truth, no one had, it's the gap between that I'm confident in my business and I'm not that confident in the wider economy. That is a huge driver to say, I'll go to temp. And what we're seeing on perm is we definitely saw an uptick in perm through the autumn. We think there's a bit of a dam, and basically we've got demand for perm building up behind a dam. More perm hiring is now taking place than was taking place during last year. But as soon as it becomes clear that the pandemic is over, I think that perm dam will bust and we'll get a lot of perm activity. In the meantime, I think temp will take up the slack massively. And there's one sector where I think the story is slightly different, which is I think in IT, there is some evidence of clients using this as an opportunity with unemployment rising and economic uncertainty to pull long-time temp and contracting workers onto the staff, because actually they've always really wanted them there but have been unable to persuade them to come.
I think that's a very, very interesting point. And, you mentioned earlier as well briefly about Brexit. There's concern about that. But, so far, we haven't seen those massive queues that were predicted. There is obviously a lot of talk in the press about a lot of extra bureaucracy, which was, I think, fully expected. But so far, I think the sentiment appears to be, Neil, that we've not seen quite the chaos that some doom and gloom merchants were predicting. I would come back to your point. If, as we are beginning to see Brexit sort of moving across fairly smoothly, if that is the course of direction, presumably that might also fuel additional permanent placements and additional hiring in the near future.
Well, look, I think that Brexit as an issue is going to be with us for a long time. So I think from my perspective, 3 stages. We are still in a quasi-transition stage, okay? There's all sorts of easements going on around supermarkets and medicines at the moment, which will dissipate over time. Trade flows are lower generally at the moment because of COVID and low activity. We're not out of the woods on the border, particularly the internal border, which is problematic. So, concern levels in freight transit, logistics are very high, and we will need to find ways to navigate that. But, and this is the big but, I do think the critical thing is the political heat's gone out of it a little bit, and the political heat's gone out of it in 2 ways. Firstly, we can now have a debate about trade and a debate about immigration and kind of access to labour from other countries that isn't immediately stymied by Brexit. Because Brexit's like, it just eats, for the last 5 years, it's eaten everything in terms of public debate. And we've now moved beyond that in a really positive way to being able to have discussions about specific issues again. So that'll help. The second thing is, don't discount what's happening with the vaccine, because I think the vaccine debate over the last week has actually been quite a unifier, not because it proves one side or the other right, but that I think it's educated the whole debate about the way the world now works, which is everything with the UK will end up being a negotiation with the European Union. And it's just a question of how we do that smoothly. So I still think there's a year of getting red tape out of the way before Brexit's an issue. It goes away as a day-to-day issue, but at least it's in our hands now in a way that it wasn't when it was with the politicians.
Yeah. Thanks, Neil. Thank you very much. Okay.
So Neil, so I think just to interject a bit there, so you're feeling from within the REC on behalf of the recruiters fairly confident about this coming sort of 9-10 months?
Yeah, I mean, look, let's have a look at recovery. I put a few slides together on this because I think it's quite an interesting story to tell. And why do I think that the recovery is sustainable? Well, this is some of the stuff, Paul, you were asking about. This is from the Bank of England's last monetary policy report, and critically, it's from early November. There's actually one due about now, so this is quite old data, and it doesn't price in the current lockdown, which is why you see Q1 21 in the graph on the left. The economy is growing, and in the graph on the right, you see an earlier turnaround in unemployment. But the critical thing is this. There is every potential that the economy will get back to the size it was in February 2020 by the end of the year. As the probabilities chart on the left shows, that's the Bank of England's prediction from November. And we've talked already about the kind of likely top point of unemployment being lower than it was after the financial crisis. So this is not, as we feared maybe it would be in March and April last year, an employment crisis of the scale that I think focused minds in the Treasury when we were discussing the necessity of the furlough scheme with them. This is a standard recession, and they come along and we know how to deal with them, and we know that the industry is usually first in and first out. So where does the growth come from? I've got one graph which I think tells the entire story, and it's this. This is the household savings ratio, i.e. it's you and me and everyone at home, end of the month, how much have we got left and we're willing to leave in the bank account or in the building society. Now, you're just going to have to trust me that that sort of flattish line in the first part of the graph goes back to the Second World War. And it does. It bounces about a bit between 5 and 10%. But it goes right back, which makes the spike in savings that you see last summer absolutely unheard of. So yes, the bottom third of the income distribution is having a really tough time right now. The top 2/3 of households in the UK are sitting on more cash than they ever have. Now, I've seen lots of surveys out there saying, oh, we're not going to go out and spend it in a rush when COVID's over. But I've also met the British consumer before, and that's not how they work. That is your stimulus right there. The minute we get through this, loads of that money floods into the consumer economy. It floods into restaurants. It floods into white goods sales. It floods into construction. That is the bit that will drive almost the I'm actually more worried about the crash in 22-23 as an economist from this sugar rush than I am about the recovery in 2021. And what's really important to remember here is businesses are in the same space. Businesses have been holding cash as well. And we know what happens just before a recovery is there's an investment splurge from businesses. And that often involves capital, which drives the economy, but it often also involves labour. And that, I think, is where you get those positive hiring numbers from in our surveys. So all of that is actually quite a sustainable picture for a recovery through the middle and end of the year. And of course, we know, as I said before, recruitment's usually at the front end of recovery. So that's why I'm not surprised to be getting much better reports in January from most REC members than I was expecting. And I think it will pick up through the year. I think there's real cause for optimism. You're on mute, Paul. Someone had to do it.
I know, and it was me. Usually is. Thank you. I love the analogy about the sugar rush. You've just touched upon the labour market there. And I guess as you were speaking, that was one of the questions I had is, you know, the recovery is only going to be sustainable if we've got enough labour, you know, physical labour in the labour market to meet the demand and do the work. Do you see that as a barrier to this sugar rush being realised?
Yes. That's the short answer is that there are lots of reasons to believe that unemployment will be a relatively short-lived phenomenon in the UK through this. I don't think it's an immediate problem, because particularly because of the way that the businesses that COVID affects, they are high, the labour-intensive businesses. But I think it quite quickly becomes a problem as we move through, and it's why you need to have sensible discussions about the immigration regime with the Home Office. And importantly, and this is where I think I'm going to talk a bit about this later, there's a really big opportunity here, which is Britain's problem is not going to be jobs. You know, we are not the United States. The United States has a challenge with jobs and progression. We don't have a problem with job creation. We will have a problem with job transitions as we go through this. And what an opportunity for the sector to support that transitions agenda.
Yeah, totally agree. Just in terms of the recovery, are you seeing you know, any uptake and surge in you know, startups? So people, you know, maybe displaced in the recruitment industry and then taken to the startups. I know sometimes we've seen a similar trend in the past with recessions. And any activity startups, and equally any activity about closures, Neil?
So we did see closures primarily last year. There's been a big move, I think, there. If I'm looking at troubled firms in the sector now, they've moved over the last 8 months from I don't know if we'll make it and we might exit, to we're pretty confident we'll make it now, but it's tight. So it's suffering with the dawn on the horizon. rather than suffering and potentially pulling out. On startups, exactly the same trend. We talked to a lot of people thinking about starting up in the summer last year. And as we talked to them, what was clear was they weren't thinking of starting up now, they were thinking of starting up soon. That soon has become now over the last couple of months. So we're definitely seeing a flow. We had a really strong flow of new members into the REC through the second half of last year. Which I think is always a sign of people moving into being ready to trade.
Yeah, no, I totally agree. And you just touched upon on your early slides about services. I guess this is that dilemma moment. Seeing that hopefully we're not quite through, but we can see light at the end of the tunnel. Is now a good time for agencies to start to think about investing in new services, new product lines, new markets, pivoting some of the markets? What you're seeing and what you're hearing from other members regarding that?
What we say, probably three things. Yes, absolutely. So pivot in 2020 was pivot to where I can find some revenue. Increasingly, it's becoming pivot to where I find some sustainability for the long term. Second thing then is staff. There was before a real the event real challenge in getting high quality consultants in the industry on side, a real talent shortage. I see lots of agencies out there using this as an opportunity to bring skilled talent into their teams. And I think linked to that then to think about talent development in their own teams. Not a surprise in January to see a big recovery in calls at the REC, as in people who have been trained by their employer or through a training centre taking the examination, and that's usually a sign of investment picking up. I think the third thing is, we'll go on to talk a little bit about this, is just building under an understanding that clients' problems now aren't necessarily the ones they had before.
Yeah.
And building up that seniority of discussion with clients so that you're not just taking an order from a long established client, you're understanding how their business has changed and trying to solve their new problem. And I think that's super important. See lots of discussion in certainly larger agencies about the necessity of being more team-based. Certainly some talking much more about 180 rather than 360 as an approach, so that they are doing two things. On the defensive, guarding against your consultant leaves and takes your client relationship with them, but on the offensive, getting into the room to discuss bigger business problems than just can you fill that seat please, which we know has been coming for years. And I think that maturity in that discussion is really important.
Yeah, I totally agree. And we've been, the four of us, we've been talking about that for quite some time now in terms of having much more consultative discussions with clients than just around taking an order, and trying to use that as a position and a means to defend your own sort of market share along with everything else. Just the last question for me, just around, are we likely to see, do you think, an increase in investor activity if the market continues to recover? Investors in agencies, I mean.
I think we're already seeing it. You saw Andy Grobler at Credit Suisse, who's probably the leading city analyst of the listed firms, upgrade all the listed firms recently. We're definitely seeing PE money start to look at the sector again in a way that it hadn't for a couple of years before. I'm aware of several firms in our membership who are private buyers who are looking at acquisition. There's definitely activity coming, and this is, again, I talked about an investment boom. One aspect of an investment boom is M&A, and I think we're starting to see it flow through. I'm anticipating quite a heavy deal flow in the sector through this year, and we've already seen one or two bits. The big Irish deal a couple of weeks ago, for example.
Yeah, cool. Thank you.
Shall I just talk a little bit, because we were exploring some themes there, and talk a little bit about the industry and recovery. and just put some flesh on the bones of that discussion that we were having, Paul. Because I think there are four things that probably stand out for me in terms of thinking about the industry as it recovers. And I've kind of riffed on a few of these already this morning. So, you know, some of the change we've seen is secular. Industries are not coming back in the way that they were before, and some of it is cyclical. And that does create that need to transition labour between sectors and between roles, creates a lot of skills challenges, also creates quite a lot of labour market tightness. So I think it's possible that we might end up with a mismatch of labour supply to labour demand across the economy. One of the things we'll set out, I'll talk a bit in a minute about a fantastic new bit of work we're launching in 2 weeks' time from the REC on the contribution to the economy of the sector. But one of the things that a really vibrant recruitment sector does is it minimises that that mismatch as quickly as you can. So really important to the industry if we make our calls on what change is not cyclical but permanent. Demographics and Brexit dynamics. We've talked about kind of Brexit, end of free movement. We're already seeing that challenges of that in logistics, in driving, in food manufacturing. Really important to remember that demographics is just a bit as big a factor, and people kind of think about demographics in different ways, but there are just more people who were born in the 1950s than people who were born in the 2000s. So by definition, the domestically generated labour force will get smaller over the next few years. And that again is another push along with changes in the immigration framework to contracting labour supply. Importantly, I don't think the challenges to businesses on issues like inclusion and good work will go away. In fact, I think they'll rise up the agenda. And I think you can go to your client relationships, supply chain transparency. You know, I spent some time with a group of members recently putting together a charter for CCS on what will CCS expect of the industry in terms of this stuff. Now, they're a public sector client, of course, they'd be doing that, you'd say. But I do think that that will come hard. You look at back in March, April, the kind of destruction of some companies' reputations over the way they handled the onset of the pandemic. I think that that sense of doing things the right way, supply chain transparency is going to be really strong. And then you can't have any of these lists without mentioning RecTech. And one of the challenges with recruitment technology is that every vendor has world-changing AI, and mostly it's automation. I think you said that to me once, Paul Sharp. But the critical thing is it's a massive opportunity. And it's a massive opportunity linked to the discussion we've been having about services, which is it's necessary but not sufficient to survival. The more we can do with technology that simplifies things in fair ways, and AI is really challenging on that. We've been working with the Centre for Data Ethics and Innovation on recruitment and AI, because there's a real challenge from my third bullet point on this slide into my fourth bullet point. And the real risk is the shutters come down from government in a regulatory way and lock us out of all that productivity increase, because there's concern about the discrimination impact of how AI is used. So the two are linked. But getting the tech, render to the tech the stuff that the tech does well, so your people are doing the things that add real value in the services side, I think is a super important message. So it's not a technology or people, it's both and. Because this lava flow is the best picture I could think of for tectonic plates, or at least the best one I could find for free on Google Images when putting these slides together. Remember that the world is changing fast for clients. And I've done a number of pods over the last year or so with HR directors. You know, you guys know that my background is working with FTSE 250 HR directors in my CBI days. And every one of them says to me, the thing that makes me want to talk to a recruiter right now is if they have an idea. Don't want to know about what jobs they can review. Bring me an idea, because talent acquisition teams and HR teams, they don't write business strategies and they don't make decisions on markets. Those decisions are made in the execs and in the line. So they are struggling for a map too. They're trying to find what the solution is on the people side and the people plan to meet this new business plan the client has. And that's the discussion you want to try and get into, with getting your relationships right. Because if you get into that space, in some ways, the client might lead you to what your service shape is. And maybe it's just one or two key clients where you can climb the value chain. But I think that's a really important part of all of this.
Yeah, and I mean, you put the slide up there, Neil, about the government agenda, but what's happening with some of the forthcoming legislation?
Well, here's one slide. Immediate issues, clearly IR35, it's on the statute book and it's coming. And we are pushing at them on umbrella regulation, which I think actually matters to being able to deliver IR35. The immigration changes, which are a hodgepodge through the year, everything from making sure that we can get can keep online right to work checking, through to clarity over that change at the end of June in terms of how you check right to work for people coming from the EU, through to having a proper discussion about the shortages that will appear during the year in logistics and food manufacturing. Lots on COVID cash flow support. I mean, one of the biggest things, I think perhaps unexpectedly to me, the thing that REC members liked most of the package that the business organisations and the government put together for supporting the first lockdown was the Q2 VAT pushback, because it's a very big and obvious cash flow support. Of course, you have to start paying that back in April. And one of the things we've been talking to government about is, well, all for paying it back, but when is really important. So making sure that cash flow support remains in place and is accessible to recruiters. And then the last bit's operating internationally, where I think at the moment we're kind of getting away with it because we're doing everything remotely anyway. But when people start to have to move across borders again, I think we'll pretty clearly get a swift sign of how much work recruiters will need to do. I mean, there's a lot of monitoring that comes out of Brexit in terms of where your consultants who are working internationally are spending their time and whether they need a visa. We've got an example from last week of two guys going into Germany to do some maintenance work on something, and they were denied entry because they should have had a visa. Now, actually, we think under the TCA they shouldn't have needed a visa, but there are now 27 different regimes, and consistency between them is going to be difficult to find. So I think those four things are really big, immediate challenges for the industry, where there's action needed from businesses, and we are continuing to push it at government. In the longer term, I think this whole theme about inclusion and levelling up, the kind of regions and nations agenda, is super important. I think skills, again, talking about transitions, is going to be really important, and I do think standards will matter more than ever, both push from government and push from clients. So a lot of what we're doing at the moment is trying to keep up the pressure on the first bullet point and start to roll the pitch for a really strong line of attack on the second bullet point. So when we get to the 18th of Feb, we're going to launch this new report that sets out very clearly the value the industry delivers, both in terms of inclusion and opportunity for candidates and in terms of economic growth. And without giving away the lead, it's basically a report that argues that you should view recruitment alongside the law and financial services in its importance to the United Kingdom economy. And it sets that out very clearly with numbers that make that clear. Both the big economic analysis, but also we surveyed 500 business leaders, we surveyed 2,000 candidates, as well as REC members. So I think that piece around getting recruitment a place at the table, so that what happens as we go forward is done with us and not to us. That's probably the biggest single part of the REC's representation agenda. And a classic case in point would be, if you look at the canon of British employment law, furlough's a great example. Everything is written to assume that this person has one employer for whom they work on an open-ended full-time contract. We are going to need to move beyond that. And that kind of work is, I think, going to be an important part of what we do for the next, I'd say, decade, actually.
Neil, just a quick question. IR35, and I'm sure you're fed up with me asking this and texting you and everything else. is it going to happen, or is it going to get pulled at the last minute?
You love, Paul, to expose the difference between what I think and what I advise members and what I've said to the Treasury. Right, we have said to the Treasury that it would be a good idea to push it back again and to properly regulate umbrellas before you do it. Do I think? And the reason this is uncomfortable because it exposes what I think my chances of success are. I do not rate my own chances of success on this. It is in law. It is on the statute book in a way it wasn't this time last year. Mm-hmm. I fully expect it to come into law, and every recruitment business should be ready for it to come into law. And there's lots on the REC website and so forth for people to look at around that. I'm, in terms of kicking it back, I wouldn't give it more than about 25% chance, and I wouldn't kind of wager the business on 25% chances. Yeah.
Thank you.
Neil, I think you saw the question coming from Robin about what additional government help would the RSC like to see to get more people back into employment after COVID, or what has the government promised, if anything?
So I think at the moment there's a big challenge with the delivery of government programs. They're quite slow. They are quite high level. We've been involved with Kickstarter. We've actually got some REC members who now have Kickstarter placements through the REC inside their businesses, and we're always keen to help members who want to do that. I think young people are in a particularly vulnerable situation at this moment. Our big messages to government are firstly cash flow, as in you can't end the furlough scheme at the end of April if the pandemic's still going on. You can't ask people to start paying back, whether it's CBILS or VAT support, at the end of April, and you need to extend the business rate support. So all of that is a critical ask in terms of just pushing the timeline out, because that helps people get back to having decent revenue before they have to start repaying government support. I said earlier, I'm a big fan of big macro steps rather than trying to do little things. Government's fond of kind of little subscale schemes that do some good. So a really big thing for me is drawing tax support to business away from output taxation and into input taxation. And that's a really kind of wonky way of putting it, so my apologies. What I mean by that is government has focused for years on having a really low rate of corporation tax. But corporation tax happens way, way down there when you've made a profit. And actually, costs of activity have gone up. So I think one of the things government needs to do is address national insurance, employers' national insurance, which has crept up over years, because that just creates space in clients' HR budgets to retain or bring on new staff. And then the last thing is skills, where I think you don't need to tell you that the apprenticeship levy is a failed policy. And if there has ever been a time to change it, now is the time. I think particularly for our sector, where lots of agencies see large bills going out, going out month after month in ways that, and they can't spend that levy money on training temps because of the way the thing's structured. Couple of more parochial things. There's a real challenge at the moment with supply teachers and supporting supply teachers, which we're working hard on. And an SSP, which I think more coverage for SSP for agencies is really important to encourage people to take tests, and if they take that test, if that test comes back positive, to self-isolate because of the scale of potential absences, particularly in food manufacturing, where people are working in cold areas. That's super important too.
Neil, just a quick question from me. Got the budget coming up. Lots of rumours that Rishi's going to look at dividends, taxation. He wants to see a sort of some parity between what company directors are paying in tax and employed people, PAYE. Do you see that coming in our direction fairly soon?
I think some move in that direction is probably likely over the next few years. I think the government will be cagey about doing it quickly. And personal opinion, not the opinion of the REC, I think when you look at the kind of the political factors, making that move quickly is quite difficult given who kind of the benefactors of the Conservative Party tend to be. The steps on dividend taxation, and the other one that is perennial is the ending of higher rate tax relief on pensions contributions. I think they're always around. I think he may make a step or make a commitment. I don't anticipate that he's about to make a big step, especially, of course, as he has completely failed to offer any support to owner-operating company directors through this period, which, as you know, Paul, has been a big thorn in the REC's side throughout this year, and is again something that's in the submission that we're giving to the Treasury this week. Because actually, you could, even if you viewed the world the way the Treasury seems to, you could almost have justified not supporting company directors in March and April 2020. But we're a year on now, as Howard pointed out at the start, and these people and these businesses are critical to supporting the recovery.
But I think reasonable to suggest that corporation tax will be increased fairly soon.
I don't think there's appetite across the wider business community to argue for the planned reductions that government previously had. And I do think there's been developing, even back to the times when I was at the CBI, there is some appetite amongst larger businesses for some kind of grand bargain, which says it's not vital that we have the lowest rate of CT in the G20. We just need to have one of the lowest ones. But in return for that, give us our business rates reform, give us our kind of lower taxes on operations. And I wonder whether over time that's where the tax picture is moving when it comes to business tax.
Interesting. Thank you for that, Neil. Thank you.
So just to finish off, guys, I thought I'd say a little bit about where the REC is going. This is us. This is fairly standard stuff. 3,300 recruitment businesses, 10,000 individual professionals. Critical thing for us, threefold. One, speaking up and standing up for the industry, being at your back and at your side. Standards, making sure we do things the right way. That's legal support, obviously, but also being willing to challenge stuff that needs calling out. And then thirdly, helping you grow your business, which a large part of which, of course, is kind of the partnership that we've got with Jump, but also our own work in terms of business advice, more and more of which is being delivered online. In terms of our priorities for this year, that strong voice thing is really important. Probably the thing I draw out of this slide, people can see where the priorities lie, is making sure that we are both regional, national and global. I think in the past, the REC being based in London has been can have been seen as a bit of a London-based organisation, pushing a lot more out to the regions now, albeit at the moment virtually. I tend to make the joke that the REC board wanted to
Neil,
yes.
Neil, sorry, your microphone I think is just fading in and out. It might be just catching on your shirt a little bit. Right?
Let me. I'll just adjust. Can you hear me all right now, Paul?
Yes.
Yeah, that's better. Thank you.
So, just to make this point, in the past, the REC might have been pastiched as a bit of a London organisation, or London. We are London-based. I tend to make the view that that's why they hired someone who thinks Newcastle upon Tyne is in the south as chief executive. But there's a really big agenda on our side to make sure the REC is relevant, local to members, in member sectors and internationally. And I think I make this point quite a lot. The REC is the most global of Britain's recruitment organisations. Because I sit on the board of the World Employment Confederation, we can link people with international trade ambitions up globally to sister feds. And last week we ran a great webinar with the Department for Trade on how to grow a recruitment business internationally. And as we learn our way through the TCA and all of the other trade deals that will come, I think there's going to be a big and important role for the REC in doing all of that as well.
Looking at that, Neil, obviously there's quite a lot going on with the REC, and you say a lot of regionally. A lot of people, when we talk to agency owners, always ask what actually does that mean? What's actually going to be rolled out to them, sort of to help them? Because as you say, you do sometimes appear as being London centric, although there's a lot of regional stuff going on. What is it actually you're going to be rolling out?
So we changed our account management profile so that we're dealing with accounts regionally, rather than by size. That means that when we get back to the world where we can get together, I did a session with Northwest business leaders on Zoom call like this last week. A really good discussion, allows us to dig into issues like, the REC does lots of work with Andy Burnham on the Manchester Skills Plan now. All the more important, of course, in Belfast, Cardiff, and Edinburgh, where a lot of the stuff that affects recruiters is devolved. The number of letters I have written over the last year to Kate Forbes on business rate support for Scottish recruiters, where recruiters in Scotland were not getting the support that recruiters in England were getting, is a classic example of how we just need to be more active. And when I started, David Creighton in Scotland, our Scotland lead, was starting at the same time, and we've seen the transformational effect of having someone on the ground to us being able to understand and deliver for businesses locally. So it's much more on the ground stuff. At the moment, of course, that's all Zoom, but when we get back normal, it's also hitting the road. The other thing, of course, is a load of the stuff that previously we might have done as a physical event is currently online. And I'm not sure, I'm not sure. I don't think lots of it will go back to being physical events. I do think it makes a lot more sense for a decent slug of what the REC does to be delivered digitally because it's easier to access. So a lot of it, it's almost serendipity, Howard, that we did a big slug of digital innovation in terms of CRM, website, online. Paul helped out with a few bits of that in the year before the coronavirus struck, but we've been able to leverage that quite well. So it's really about being able to slide into people's diaries for an hour rather than ask them to trek up to London for the privilege of talking to us.
Yeah, and I think that's certainly out in this in the counties, a lot of agencies are asking for that sort of thing, that if you're doing it online, or is it going to be a local regional event, it'd be far more easy for them to attend, etc., etc. And I think the world is hugely changing, and although some of the digital things that we did last year with regards to events, etc., maybe didn't have the uptake that a normal physical event would have, but I think as the transition goes from being sort of physical to more digital, that will become more the norm. Certainly in 2021, 22, 23, it'll become more the norm. And obviously that reduces carbon footprint, etc. But what it also does, it says to all business owners, is that I'm saving a massive amount of time where I'm traveling to go see something. I could invest that time in a far more influential way for my business. So I think it's important that regional thing happens, but also those digital things happen as well.
It also gives us a way of supporting members and clients in new ways. So 2 examples. I think the scales fell from a lot of people at the REC's eyes when we ran our conference digitally last year. We had 1,000 members engage, which is a hit rate is massively more than normal. Normally the room that we host our conference in only holds 250 people. So that scale of impact. The other thing is, I'll give you a great example. Local firm to here, where I am in Oxfordshire, Allen Associates. I did a session for the clients recently on this is the labour market outlook. This is what I'm saying. My background's labour market economist. I'm still on the Low Pay Commission. We have other experts on the REC staff. Digital gives us an opportunity to do things for members. I spoke to the Hayes UK and Ireland management team about the outlook for the industry in 21 last last Monday night. Those are the kinds of things that it's easier for the REC to do now, and hopefully have a greater impact on the client relations that members are trying to build than kind of just handing them a piece of paper with some of our analysis on.
So what you're saying then is you're now going to get inundated from all the people on here to come and speak to their businesses and work from there.
Phone doesn't ring enough. Yeah.
Good. Well, there you go, everybody listening.
That's an open invite.
Open invite. Absolutely. And that's really interesting because a lot of people say how do they get in touch and what do they do? And an open invite is a really sort of a generous offer. So yeah, guys, if you're out there and you want to do something from a business point of view, take that up.
Yeah. Look, we are there's two ways that you can be a membership organization. You can either put yourself out there, or you can try and get by and do what you've always done and hope people keep paying the sub. You know, the REC is a recruitment organization. Recruiters don't hope to get by and hope people keep paying the sub. We go out there and we try and change the world, and that's the way the REC's run as well. Right.
Well, Neil, that has been an enlightening hour, and as always, it goes extremely quickly for all of us. So as we sort of move on to the next slide from there, so Jim, we have an announcement. As I said at the beginning, we've got an announcement to make, and I think that an announcement is as we sort of move through, you know, the sort of data that we get back, and it's interesting that we've got lots of data back from people like the REC and other partners. And when we launched Jump, what we said we were going to do, we wanted to give back to the marketplace, and we want to give back just more than the webinars that we're doing. We want to give something back. So we've been working close with our partners. We've been working with the REC, and we've been working with Odro. And since we've sort of started that launch, the data that it's got back to us has said that the biggest area in recruitment that needs the most help are those people in the first 3 years. It said there's more businesses fail in the first 3 years than any other part of the recruitment agency. The other side of that was also getting agencies above that 10 headcount and not. And it was how to maintain that growth and prevent real bottlenecks in their companies from prohibiting growth and stopping them going under. So launching today, Jump are about to launch our Jumpstart program. This will be an annual program. It's in collaboration with the REC and with Odro. And if we just flip onto the next slide there, Neil, please. And what we're going to do is we're going to have a competition. And the competition is all companies between 6 months and 36 months old. The winners will get an REC membership for a year, or if they're already members, free support and training. They'll also get, each company will get a free Odro license for 12 months. Each Jump co-founder is going to give 1.5 day per month mentoring and coaching to the 4 winners, because there will be 4 people that we're going to choose, and that'll be in excess of more than sort of £36,000 that we're going to be investing. We'll invest the Jump marketing audit and there will be 4 winners. So we're going to launch this competition in the very coming future. The idea is as of the 1st of April, we will then kick that off. What we will do is we'll be asking for people to submit an entry to us, and then we will review all the entries, and the REC, Odro, and ourselves will then vet those entries and then bring the final 4 into play. And then on the 1st of April, we'll start working with them for 12 months. So if you are an agency of that size, then feel free to watch out for the application and get it filled in. If you know agencies of that size, feel free to inform them of that, because we believe it's part of our DNA is to actually give back to the marketplace and passionately and help parts of the marketplace that are really suffering. And that sort of 0 to 3 years is the real big part of the marketplace that suffers hugely. So that's what we're doing from there. So Neil, thank you very much. If anyone's got any more questions for Neil, feel free to pass those questions in and now. Otherwise, I'd say thank you very much. It's been a super webinar, Neil, and thank you very much for your time and input.
Thanks, Neil. Thank you very much.
Thanks, Neil.
Pleasure.
Thanks, everyone.